Hey, it's Brennan, and it is Thursday, April 3rd. This is your weekly market watch for the Seattle area real estate market. Hey there, thanks for tuning in. It's Brendan Klaus, and today is Thursday, April 3rd, and let's dive right into the numbers because this week's Market Watch is going to be interesting, that's for sure. So yesterday, we saw the announcement of new tariffs in the US, which sent the financial markets into a little bit of a tailspin, and how that resulted as far as mortgage rates go is that mortgage rates are actually the lowest they've been for the past 5 months. So we broke a low that we saw back in October of 2024. We're now at 6.63% for the 30-year fixed and at 6.05% for the 15-year fix. Now, this is really the lowest we've seen in the past 5 months, which could be welcome news for buyers. We are going to have a jobs report tomorrow that comes out, and so that could either bring the rates even lower or potentially shoot them back up. So depending on what that looks like, we will see this probably have some turbulence with what is going on in the economy right now. So for buyers, that means that if you're thinking about locking in a loan, now might be the right time to do it, actually. A lot of people may be thinking right now about taking money out of the stock market and putting it into something like real estate because it could be a little less of a volatile investment. That is, if you can get the money out of the stock market that you want. So if you're already down a lot, you may not want to pull it out yet. But if you're afraid that the stock market may continue to go down, you may be wanting to pull that money out and put it into something like real estate that could be more of an assured asset class, or maybe just a little less volatile for you. Obviously a little less accessible though as well. So that is something that we're watching to see if people are going to do that. And if that's going to impact the real estate market, I could see if the rates continue to come down like this, that maybe people would do that and take some of their money and put it into something like real estate or something a little bit more stable while the economy is going through these turbulent times. So the 30-year FHA and 30-year VA loans are at 6.07 and 6.09%. respectively right now. So this is what we're seeing this week. Again, as you know, these numbers can change very quickly. So stay tuned and we'll always keep you updated on what the numbers are doing. Let's talk a little bit about what's going on in the market right now, things that we've been seeing. So we did see a condo downtown that closed after being on the market probably for about 9 months, much lower than originally listed for. That was one that we were watching for our client because we just listed a condo in that building. So we are seeing some condos move. We had one listed for about 4 months, which was on the market prior to that with another agent for 6 months before that. That one finally got under contract. We also had another condo in Queen Anne that's under contract after just about a week and a half on the market. So it does feel a bit like the condo market is moving. In the single family home market, we are definitely seeing movement. We're seeing a lot of buyers in that market. Even homes that are not amazing, but in a great location are still getting 5, 6 or more offers. And so we are seeing that market really still going strong. As far as the number of listings on the market in Seattle this week, what we saw in the condo market, we saw 12 new listings over the past 7 days, an increase of 12 at 196. That's up from 184. The pending listings, we saw an increase of 10 at 182, up from 172 the 7 days prior. And sold listings, we saw an increase of 25 at 144, up from 119 the previous 7 days. So condo market is still pretty steady, no big fluctuations. But like I mentioned, it does seem like the number of listings going under contract now is now increased from where it was even a couple months ago and going to keep pace with the number of new listings coming on. That's good news if you are a condo owner and you're thinking about selling. If you're a condo buyer, be aware of that maybe the inventory is getting bought up a little bit quicker than it was at the beginning of the year. As far as the single family home market, this 7 days, we saw an increase of 20 new listings. That's at 453, up from 433 the week before. We saw pending or homes under contract go down by 4 at 518, down from 522 the previous 7 days. And we saw sold listings up 52 at 430. That's up from 378 the week prior. So the pending listings are slowing down a little bit, just slightly, and that number 518 is getting ever closer to the number of new listings at 453. 2023. So we're seeing those are kind of in lockstep right now. So everything that's coming on the market is really getting offers on it. The big variation there is townhomes. So townhomes, especially in that $800,000 to $1.1 million range, and especially if you're competing with brand new construction townhomes, is taking a lot longer to sell. And that's because there is a lot of supply in that submarket of townhomes that are newer in those great locations. So something to be aware of. If you are a seller of a townhome, you need to be aware of your competition, especially if that's new construction. And if you're a buyer of a townhome, you probably have a little bit more choice and ability to negotiate on those because they're taking longer to sell. This has been your weekly market watch for the Seattle area real estate market. If you have any questions or you want to know more, please leave a comment or reach out if you want to start your free strategy session about getting your home to the market in the spring market, which we're seeing pick up right now, or if you want to talk about your strategy for buying, whether you're 3 months or 3 years from your start date, now is the right time to start that conversation so you can get prepared whether you are buying or selling. Thanks for tuning in. We'll see you again next week.